subscribe to our YouTube channel VanFin Multibaggers and press the bell icon to see the latest updates and videos. VanFin, discover opportunities, create wealth.
Ravi Kataria joining us of Investment Imperative. Ravi, thanks very much. Good morning. Good to have you here. So what we're going to do is talk about three stocks that you like. So the first one is Kochi Shipyard. Why don't you talk about that, why you like it, and the rationale, etc. Yes.
Sure. See, Kochi Shipyard is garnering more than 80% of its revenues from the defense contracts and remaining from the commercial shipbreaking and the repairs. So its current order book is, we are expecting it to bump up with the orders of 5.4 thousand crores of ASWs, and the phase 3 of IAC, the Integrated Aircraft Carriers, we are expecting it to fall into the court of Kochi Shipyard. So that should add another 10,000 odd crores in its order book. So we are having a decent revenue visibility for the company on the defense contract side for the next 3 to 4 years. And the IPO proceeds that the company has received is investing in the International Ship Repair Center. So that business has already jumped to almost like 500 crores odd in the FY18, and we are expecting it to triple by FY20. So the ship repair business is quite augmentative. It's high operating margins. The company has entered into MOUs with the Mumbai, Kolkata and Andaman Nicobar ports, and with the drivers like development of SEZs and so on and so forth. Yeah.
Okay.
We are expecting the company to
Okay, fair enough. So for Kochi Shipyard, you have a target of 594. Just explain the rationale behind Rushil Decor. Why exactly do you like the stock, and what is your target price, and what is the time frame as well?
Sure. See, Rushil has expanded recently into WPCs. Sheets are being, preferred by all those which are coming up with the smart cities and green cities projects. It's a 100% eco-friendly product, and it has done 5760 MT per annum kind of in capacity at its existing facility in Chikmagalur. So that should add around 60 odd crores in its top line. And the company is also expanding its MDF capacity by almost 3x by FY20. It's estimated to cost the company around 340 crores, which will be funded with a ratio of 2:1 in debt to equity. Now, MDF and WPCs have hardly any penetration in the total consumption of laminates. So the company is expected to, gain out of it, and we are expecting its revenue to expand by 50% almost by FY20 due to these additions. And we have kept a price target of 1173 for the stock, considering an EV to EBITDA of the 16x.
Okay.
Last one is Vedanta.
Vedanta is, the global commodity cycle has reversed since the last quarter of 2016 and 17. We are expecting it to last at least 3 to 4 years given the global economic outlook, and it would be one of the strongest post-2007, recession era. It excludes oil. We are talking about non-ferrous metals, aluminum, zinc, copper, which constitutes more than 3/4 of the total revenues of the Vedanta. The remaining 20% comes from oil and gas and power, which is expected to be subservient and relatively lower on the growth side due to the pricing and the supply pressures. Now, the company is going to operate its 6th facility as Jansagar, and that should add to its total supply, and from the demand perspective, we are fairly confident. It's having a sizable debt of 29 billion on a consolidated basis, but it's reducing it by 3 to 4 billion depending upon its current cash flows. So we have a price target of 396 on a EV to EBITDA of 12x. Yeah.
Okay. All right, Ravi, we're going to leave it on that note. Thanks very much for joining in and taking us through all of your fundamental picks.